Hey, Dan Passarelli here. Well, we had CPI come out this morning. It came in kind of as expected, but it was expected to be high, and well, it was high. Inflation is ticking up, and that gave me some expectations that I thought were perfectly reasonable, and some things happened that I didn't expect. So let's talk about that. The market opened higher today, all-time high, but pulled back quite a bit from the highs. I was a little bit surprised that it made all-time highs. On the one hand, you could definitely justify that inflation, in one theory, should make stocks go higher because companies raise their prices, sell things for more. Their earnings as far as dollars are higher, even though their costs are higher too. And so just the way stocks are priced, that should make a stock go higher. However, there's a more important theory there, and that is about competing investment dollars. Instead of putting your money into the market, what else could you do with it? Well, you could put it into bonds or fixed income. And if interest rates are higher, then you could put your money into those things comfortably and not feel like you're missing out too much on stocks that are much riskier. So with inflation higher, that makes the Fed less likely to cut rates, keeping interest rates higher, which in theory should be bad for stocks. Strange. Okay, also, take a look at gold and silver here. Let's take a look at them. GC is the gold futures contract, and that strangely is down. Typically, gold is an inflation hedge, and we've talked about this in a video a few months ago now, several months ago now, maybe. It's not a spectacularly great tracking hedge, but it is a hedge for inflation, and we got higher inflation, but gold is down today, as is silver. Let's take a look at that one, /SI silver futures. I mean, it did have a fabulous run over the last 3 days before this. So this is just maybe a little bit of profit taking on the number. Now, another thing, and I know we're looking at futures a lot more today than we usually do, but I want to show you copper. This is an interesting one. Now, copper is showing a flag pattern here. It's really had a pretty precipitous run, and then when Trump announced the 50% tariff on it, it just went crazy. What is this? A 15% move in a day. Holy moly. So now this is what we call a flag pattern, and what we would expect is for a breakout right back to the upside. Now, speaking of gold and silver, where do you get that gold and silver? Well, let's ask our friends at FCX, which is Freeport-McMoRan. And that stock has really been on a tear lately. As have, a lot of stocks, right? Quite a tear lately, up over 60%, but pulled back pretty sharply today on a downgrade and on the cooling off in copper. So what happens if copper takes back off to the upside because of that flag pattern? Well, we could see a pretty strong turnaround in FCX. Now, from a valuation standpoint, FCX is not really cheap. From a dividend yield standpoint, not really cheap. But we do have earnings coming up. We've got a gap to be filled here in FCX. The historical volatility in FCX is about 40. But here's the thing. I got to open up some things here. We can buy options in FCX at pretty much fair value. Now, that's kind of an interesting one. Could it make sense to buy a straddle in FCX? Figure you pay $4, 10% of the stock price for the August 15 straddle, $4. Could we be $4 away in a month at a range of almost $2.25 today? We've had a range of $4 over the last week. And if we go and fill this gap, that would be, well, not quite $4 lower, but the 200-day moving averages. So that becomes a little bit of an interesting play, an interesting opportunity. It did coincidentally have a golden cross here just was that yesterday? A couple days ago? Yeah, it was just yesterday. But that golden cross did not pan out. I hope that helps. This is Dan Passarelli, Trade Smart.